IT stocks are winners. There are others that are getting shocked today, and this is from a fresh announcement of 126% preliminary duty on solar cells and modules from India. This is aimed at shielding US solar manufacturers with cheap imports chipping away at local production. That's what they're saying. When they're talking about cheap imports, they're talking about including imports coming in from India. Let me go across to Waaree's Abhishek Pareek. He's the Group Head Finance. Abhishek, it's almost like deja vu. It's nearly, I think 10, 11 months ago, we were having the same conversation when the first set of tariffs had come. And then we thought we had a deal, and then we were back to square one. Is that the case? Because, you know, you're seeing that in some worry from investors. What's the extent of impact?
First of all, good morning. And I really resonate with what you said, deja vu. But let me tell you one thing. Generally, deja vu is an overhang overnight. But for us, it has been happening for the last 10, 12 months of time. So what we as an organization realized that in the new realities of the world, we have to keep working towards our supply chain resilience. We have to keep looking out for alternate supply chain solutions. And that's what the result is that Waaree today has 1.6 gigawatt US capacity. We acquired 1 gigawatt 2 quarters back, and another 1.6 gigawatt of new capacity of module is under construction in the US. So by and large, 4.2 gigawatt capacity we shall have early next year. So that puts us in a very sweet spot, given the fact that any sort of import restrictions or tariffs really does not disrupt the local manufacturing in the US. And that's what has insulated Waaree so far. And I think our strategy continues from here.
And on that puts you in a sweet spot next year. But you're also saying you're insulated at this point. As I understand it, 50% of your order book is from your US sales. That's 15 to 20% of what you sell. That gets impacted immediately, right? While your US-based manufacturing will come in and mitigate, that will take time to come on and replace everything you're selling right now.
So, okay, there are basically two parts of it. One is local manufacturing in US, which is already up and live. We are already serving majority of our orders of US market from our US facility only. When you look at the order book...
Sorry. To what extent of your US orders are being served by your US manufacturing facility at this point?
More than 70-75%.
Okay.
More than 3/4. So practically majority of anyways it was being served from US. Having said so, it does not mean that we are not going to export from India. By the way, in the tariff life of last 10, 11 months, we have continued to export, and we continue to keep the export volumes as similar as it was last couple of years. So our export volumes have not come down because of the tariff, because in the regulations, what really matters is how is your supply chain distributed for entire upstream products. When we manufacture panel in India and we are getting sell from those countries which are not yet tariff-free in the US or which are insulated from these tariffs, you continue to export at the same rate at which those countries are being taxed out. So fundamentally, last 1 year also, we have been paying the regular tax of 15%, 20% that was normal and non-import of any panel from any country, despite the 50% tariffs on the Indian markets.
Okay. Abhishek, hi. Alex here. So I just want to take that point forward a little bit, right? So if you're saying 70% of US sales are catered to by local production there, which implies that 30% impact is there. So in certain other sectors, and I wonder if this took place for you as well, which is that when tariffs increase, your local buyers or the US-based buyers of these products either adjust time frames or they share the burden. Is that going to take place here where, for example, if you are going to add capacity and that starts, in April, will you push some of these deliveries to the start of the first quarter?
So irrespective of the timelines of the new lines in US going live, our exports from India shall continue to happen. So as we speak, we are still exporting export consignments from our factories all across India towards the US markets, because we were not yet utilizing the local manufactured cells for the US exports, which again insulates us from these kind of new duties which have been announced yesterday.
So help me understand that. So you're saying that, let me be absolutely clear. So out of 100 units sold in the US, currently 70 you're saying are manufactured and sold in the US itself. 30 are what you're selling as exports from India. 126% is now the levy of tariff on those exports from India. can you explain your previous sentence in the context of what I have just asked?
Sure. So while you said that majority of shipments in US were happening from the local factory in US, there were a bit of export which was happening. And I'm again reaffirming the fact that we continue to export despite any tariff, because we have ahead of time gone ahead and created alternate supply chain in the Middle East market, in the African markets, in such a way that whatever happens on tariffs in India, our supply chain shall really help us to navigate the situation. And we have done that in the last 10 years. The evidence is already there in terms of our numbers of exports, which have been happening throughout this 50% tariff deja vu also.
Okay, no, I just want to get complete clarity on that. So therefore, Abhishek, what I want to understand is the selling price of these modules, they go up by 126%, obviously, because tariff is going through. Does that get absorbed to a certain extent by you, or does that get passed on to your buyer? How does it work?
So I'll clarify here that not necessarily the selling price goes up by 126%. It only changes if you're using India-made solar cells for these exports, as simple as that. But as long as you are getting these cells from alternate supply chain markets, which are not tariffed of this extent, you will not be tariffed at the rate of 125%, even on the modules also.
So, okay, so tell me one thing, zero impact is what you're saying then?
I would rather put it this way, life continues to be the same as it was over last 12 months of time.
Okay, and what was that?
That we have been exporting the similar quantity.
Abhishek, I'm sure you're not going to stop exporting. That is one part of the story. Two, you mentioned about self-sourcing. Now, the US customs ruling clearly tells you that panels origin by cell is the key over there, right? So will you continue to then source cells globally, excluding India, so that you're able to bypass these duties? Is that what you're doing right now?
Not just that we keep importing cell, we keep opening new avenues also for new solar cells.
Okay.
Like we recently ventured into Oman for the polysilicon sourcing. We certainly keep hunting alternate markets for further supply chains.
Okay.
And some more cells for export markets.
Okay. The other thing I want to ask you is also in terms of, what happens from your revenue target perspective for FY27. If business remains as usual, growth coming in as well in terms of the kind of demand that they're looking at, any changes in terms of your FY27 outlook on that front? And two, nothing changes for your existing orders which are scheduled for delivery in FY27, right?
Yeah, certainly. So on the existing orders, there are no change in terms of timelines, etc. Number two, if you see our new capacities which have added up in last few quarters, like last quarter also we added up around 3 gigawatt plus of new module capacities, and few capacities are yet to go live over next few quarters. So it really means that we keep expanding our manufacturing base in India as well as in the US, which means certainly the number are bound to go high in terms of the new capacities which shall go live.